Hello, YouTube. My name is Mike. How are you doing today? Thanks for joining me on Health and Wealth while we discover XDTE S&P 500 ODTE covered call ETF strategy. I'm going to go do a deep dive on this to see if it's something that is investable. You let me know in the comments if you're invested in it right now. What do you love about it? What don't you love about it? Let me know. Let the crew know. Let me see how you're doing. So I've gone ahead and done a little bit of research here on ODTE covered call strategies. Now, XDTE, whole bunch of letters here back and forth, is a weekly pair of dividends. It's been out since I believe March 7th. I could be wrong. We're going to go take a look at that in a bit here. It was around then, but we're going to dive deep into it. Before we really get started, I do want to say thank you so much for the 200 plus that subscribed to my last video. I'm going to link that above. I'll also put it at the end. I'm also going to post some bloopers because this is like take number 4. So I need to embarrass myself here for you. So you can see all of the bloopers there. So stay tuned to the end if that's something they want to see. So I want to forewarn you guys, I'm not currently invested in this, but it's definitely intriguing for sure. So I'm going to get my face here a little bit smaller for you. And I've opened up Roundhill's website where it talks about XDTE S&P 500 covered call strategy here. Okay, so I've gone through the website. I'll put a link for the website in the first comment below. I'm also going to put my Questrade link if you don't have a broker yet in Canada and you're looking to get one. If you click my referral code, we both get $50. I'm also going to put my passive income link in there. So if you don't have a dividend tracker, this is a good dividend tracker. If you're a Questrade customer, it's free. And if you're not, the premium version's $99 a year, less than $10 a month. Can't go wrong with that. That's the dividend tracker that I use. So definitely a good one for sure. So here's the website of Roundhill. Pretty simple to look at, to be honest with you. I'm gonna just kind of scroll over this way a little bit so you can see the distribution rate for this ETF is 34.88%. Their goal is to reach at least 34% every single year in payouts. And so, like I said, it is a weekly pair. The Roundhill S&P 500 ODT covered call strategy is the first ETF to utilize 0 days to expiry, also known as ODTE. Options on the S&P 500. XDTE seeks to provide overnight exposure to the S&P 500 and generate income each morning by selling out of the money ODTE calls on the index. XDTE is an actively managed ETF, to say the least. So weekly distributions, I'm going to go over those with you, what they've paid out so far since March, how much you would have made if you had to put $10,000 in, first with drip and then without drip. We're going to discover all of that stuff. We're going to take a look at the price action of this fund and how it's doing so far. So yeah, good website for sure here. I won't spend too much more time on it. Like I said, I'll put the link down below if this is something you want to maybe open up while I'm talking here. Might be a good options for you to explore there. But I'll give a little bit away. Here's its price action since March. Flat line all the way across. Pretty, if you're a growth investor, this might not be for you because this doesn't appear to grow. But where you're going to be making money is the income investing. And as I say, where you're going to be making money, my head thinks, oh my goodness, Mike, you're not a financial advisor. You're just a guy on YouTube, right? So don't follow me for financial advice. Please do your own research. Come to the website. See if this is your kind of thing before you even make that decision. But do not be like me when I was a younger gentleman 4 years ago, just getting into the stock market, following YouTubers because they said that this would be great. I lost a ton of money because of it. Don't be like me when it comes to that. But I am here to help you out with some of the research I've looked at and kind of share where it could be a good thing for you to look at as well. So there's all this list of distributions. Its calendar is pretty awesome. There is a list of some of the last distributions, and it's got a nice little fact sheet down below here as well. So decent website. I want to go over the PowerPoint presentation that they put together for us here. And like I said in the last video, who doesn't love PowerPoint, right? Check mark. Of course, who doesn't love PowerPoint? I'll zoom into this just a touch for you so you can see it a little bit better. Harness volatility. That's the goal. We want to harness that volatility of the S&P. We mentioned what it does before. High income potential. XDTE seeks to generate high income through a cover call strategy on the S&P 500. So in many of my last videos, I've been talking about yield max, and so how, some people say it's too risky, too risky. I keep saying, S&P 500, Warren Buffett today, his company just passed the 1 trillion mark. Warren Buffett says just put your money in the S&P 500 if you're not an advanced investor trader. And I totally agree. So this fund is doing cover call strategy, on the S&P 500. So definitely good, and I think that's why it's so stable so far, because the S&P 500 just traditionally has an upward swing to it, which is awesome. So weekly distributions, seeks to pay weekly distributions out of sold option premiums. The fund ticker, if you want to look it up, is XDTE. It does have an expense ratio of 0.95%. So for those people out there that say, well, it's kind of expensive to be in here, I understand when you say that, almost a full percentage off the income you're making. But for me, I don't have the money to do a covered call strategy on the S&P 500. So I'm going to pay somebody else to actively do that for me if I was invested in this, and just reap the benefits of those weekly distributions. So there we go. A couple more things. There's March 7th, the the inception date. Let's just read this one down here. Each trading day, the fund will sell a covered call against its position in the index, seeking to generate options income. Daily returns are capped at the sold strike. So that's important for you to understand, that if the strike price that they set is here and the S&P 500 goes to here, you won't make that much money because it's capped here, right? So the benefit here is that we are doing this, Roundhill's doing this daily. So it's a different cap every single day to promote that weekly income that you get. Yeah, good little PowerPoint here. It's got a lot of really good information. I'll end that there. And I'm going to get rid of their website as well. I want to take a look to see how the S&P 500 is doing today. Let me drag that over for you. Give me 1 second. There we go. So the S&P 500, 5,592.14. It's down today just a little bit. Let's take a look at let's take a look at XDDT. $52.14. Now, what I've done is I've clicked on the 6-month chart here, and I'll just scroll down a little bit for you so you can see it. Over the last 6 months, it is down a whopping 26 cents. For anybody that's in the yield max funds or QQQY, those type of funds, you will sense my sarcasm. There is almost zero NAV erosion here so far. And can you guys do this with me? Knock on wood. Knock on wood. Thank you very much. Let's knock on wood. Past performance doesn't meet future performance, but so far down 26 cents in the last 6 months. Well, it's since March 7th. So let's do the math here. April, May, June, July. 5 months, down 26 cents. Pretty darn good. So you're thinking to yourself, if you're new to this type of fund, wow, that's not a great investment. You're down 26 cents. But where you're making your money is on the weekly dividends, or as a lot of people like to call them, distributions out there. So let's take a look at some of that performance right there. I'll scroll this over a little bit, and I've done some math here just with my own fingers and toes. So if you see any mistakes, don't hurt me. I could be off by a few cents here. That's okay. Remember, this is just for entertainment. And if you're entertained so far, go ahead and hit that like button for me. I appreciate the likes. I'm trying to get at least 10% of you to like this video so that more people down the road can see it as well. So XDTE, it came out on March 7th. Do you guys remember that day? It was snowing here in Canada. It was a tough one, but we got through it, and here we are. Its initial price was $52.46. And hypothetically, if you had $10,000 just hanging around in a piggy bank and you put it into your brokerage, that would have bought you 190 shares worth of um, ETF. I'll be okay. Worth of ETF. So what I did is over here on the right hand side, I put a bunch of numbers together. So I said, okay, I got 190 shares. The first dividend came out on March 26th, and it was a 21-cent dividend. So now for me, I'm looking to compound my money. So if my money was in this fund, it would be dripping. It would be compounding. The goal is to build shares here. And that's what I've done. I've kind of compounded it all through this little Excel file here. So on March 26th, 190 shares, I had, it gave me 21 cents per share. Multiply that by the 190 equals $39.90. So next week, you guys, not next month, not next quarter, not next year, but next week, we got another dividend, right? So my 190 shares still times that dividend of a 13 cents gave me $24.70. Now, what I did is I added the 24.70 plus the 39.90 from the month before, gave me 64.60. That bought me one more share and left me with $12.21 in cash for the next week. The week after that, pretty terrible, 2 cents. You can't live on 2 cents per share, but it only paid me 300. Well, it would have paid me $382. Again, I'm not an investor. I just put this little Excel file together for you guys to kind of show you that compound can work, compound interest. And again, it's only been 5 months, so roughly 20 payouts so far. But yeah, you can take a look at each month here. You can take a look at each of the in this row right here, each of the dividends that were paid out. Some months huge, some months not so huge, but weekly, that's pretty good. Over the last 5 months, it's paid out a total of $5.30 in distributions, which is pretty decent considering. If we scroll this back over here, give me 1 second. This way. We got to go this way. Our initial investment was $52.46. So in the first 5 months here, it's paid out $5.30. Pretty darn good. If you ask me, I would say that's good for sure. Now, I also took a look at something else down here. Total distributions when I drip my shares, and I'm going to write up here what drip is for you if you don't know. But it's paid out $1,052.93 so far in 5 short months, which is again pretty darn good. And when you drip, it has paid me 200 or enough to buy 210 total shares. That's an escalation of 20 shares so far. 20 shares so far in just 5 months. Pretty good. So if you think about that 20 shares, and if your average dividend is 30 cents, that's going to be paying you an extra $6 a week. Do that over a year, do that over 5 years, do it over 10 years, and you should be doing okay. Again, past performance is not what the future performance is going to be, but fingers crossed, that's what dreamers dream. So in my opinion, pretty good so far. I did a whole bunch of math. This took me a long time to do, actually. I put all of this math together like a day ago, and finally got a little time to put this video together today. So let's go take a look at this black section up here. I did a whole bunch of crunching here. I want to go ahead and unfill this and make it white so you can see that a little bit better. So again, $52.46 was the initial price. $10,000 gave you 190 shares. With drip, you purchased 20 more shares after 5 months. So your original $10,000 plus the new 1,052 reinvested, 10% mind you, in 5 months. Your total investment is $11,052.93. So if you had that 200 shares and you multiplied it by today's price, now this price might have changed since I started recording the video, but today's price at $52.26, give or take a couple cents, everybody. equals $10,974.60. So your original investment is up $974.60 or 9% again in 5 months. Personally, I think that's pretty good. If you just took the dividends and didn't reinvest it, you would have $1,007 in realized gain. I call it realized because you took that money, you probably put it somewhere else. But you would be down 20 whole cents in share price or unrealized loss of $38. That's pretty good. I'll take the 1,000, you take the 38, life's good. So you're up $974.60 without drip, or 9.8%, and you're up $1,030.13 with drip, which is 10%. Both of those include share depreciation that I've talked about above there. I also wrote something out here in a little bit of a smaller font just now. Let me go ahead and make that a little bit bigger for you. So if you had bought into the S&P 500 back on March 7th, it was $5,157. As of yesterday, it was $5,616. So with $10,000, I could have bought one share. Therefore, I would be up $459 if I purchased that. So still good, right? S&P 500 is just a beast for sure. Still good, but it's not quite what I would have made if I put $10,000 into this fund right here, XDTE. So in my opinion, and it's just my opinion, everybody, don't take me as somebody telling you what to do. This is definitely something that is so far investable. I'm trying to make it so you guys understand, like, don't follow me, but I think it's investable. What do you guys think so far? So far, so good. So I also did the same video up above here for qdte. And again, I'm going to post it at the very end on the last screen here. So click here if you want to watch that video. 5,000 people have chosen to watch that video so far. So thank you very much for that. Appreciate that. Stay tuned at the end of this video. I'm going to post 3 bloopers that I did right before I recorded this. If you want to see me kind of fizzle out and fail, watch those. If not, grab that like button and just hit it. Also, that subscribe button for me. I'm at 801 subscribers right now. Can we get it to 802 by the end of this video? Let's do our best. Stay tuned for future content. Thanks so much for being here, and I hope you have a great rest of your week. Bye for now. Hello, YouTube. Thanks for joining me today on another edition of Health and Wealth. My name is Mike, coming to you from my spare room, my office. This is where I do work every single day. But today, this office is converted to an XDTE Center of Love. Hello, YouTube. Just testing my audio. How are you doing today? My name is Mike, coming to you from Health and Wealth. Thanks for joining me today on another exciting, exhilarating episode of How Do We Get Rich Today?